Hello and welcome to another free No BS Forex TradeStation technical video. This is video number 2. Video number 1, you learned how to download and then set up your TradeStation. And today you're going to learn more about the tools that are used on your TradeStation, how to use them, and then also how to enter and exit trades. We're going to learn how to enter trades by the click of a button, so you enter at market price, or how to set pending orders. And to exit, you can use stop losses, you can use pending, you can use take profit orders, or you can also exit at the click of a button whenever you would like. So we'll talk about those. Now I want to mention quickly No BS Forex. The BS stands for Better System, and this came about over the years watching my fellow traders and students always running after a better system, thinking, oh, if I just had a better system I would make money. This system is 90% accurate. I need that system. And that opens you up to a ton of nonsense that you find on the internet. Internet marketers, which are most likely, and most of them are not Forex traders, but always marketing the next and the greater and better system to trade. And the truth is, what you need is an education. What you need is to understand the fundamentals of how the market moves. You need to understand why Elliott wave works and when it doesn't work. You need to understand about Fibonacci ratios. You need to understand about support and resistance. You need to understand the fundamentals, just like any real job or real industry. You need to understand how it works, or you're not going to be successful. And the truth is that Forex trading, it's exactly like stock trading, futures trading, ETFs. It's all the same thing. It all works off of the fundamentals that move countries and companies, and the technicals that we can find on the charts and how things move. So what we teach you is the fundamentals of how the market moves, both fundamentally and also in the technical side. We teach you the tools that you need to actually begin to put together your own system, so you're not always running after somebody else's system because you think they're real smart and they're a millionaire, so they must know what they're doing. Forget about all that and learn the market yourself. It's not that difficult. It just takes time, and that's why we put these videos together for you. So just want to give you a little bit of insight there of why we call this No BS, No Better System Forex. Forget about getting a better system, learn the fundamentals, and you put together your own system that is according to your personality and your risk tolerance, and you will be the happier for it, and you can get down to the business of becoming a successful trader. Okay, let's move on to the TradeStation video and learn how to use our tools and enter, exit, and manage trades. Okay, TradeStation technical video number 2. We come to our charts, as we will every time we open up our charts to trade, and we have to the top left Euro USD 4-hour, top right Pound USD 4-hour, bottom right US Yen 4-hour, and bottom left US Swiss 4-hour. We're going to see that our EMA 21 is being respected on the upper and lower on the Euro and the Swiss, pretty much mirror opposites, and that's how the Euro USD and the US Swiss typically are mirror opposites, because the Euro is the primary of the currency pair, and in the US Swiss the Swiss is the secondary. So you have the USD as secondary in the first and primary in the next, and so that causes them to become a mirror opposite. Clearly, as we look at the US yen, we can see that it is going up on the 4-hour as the Swiss has been going down. Even though the USD is primary on both of them, that causes us to put a caution in our mind about entering any of the market at this time at a basic or intermediate, beginner or intermediate level understanding. Now, if you have an advanced understanding of the markets and technical analysis, there are some possible what we call cross currency pairs that can be profitable to trade. But the majors right now, clearly the US dollar is not synchronizing and is not the main player in the market, moving the market at this time. And you will learn more about that as you continue in the other videos. So what we're going to do for this video is to pick one currency pair that has the best chance of possibly putting in a favorable direction. And for that I'm going to use the Pound USD. for the reason that I can draw a horizontal line across the highs here. Here we had a high, another high, and we're coming up into that high again. So this, although this is not a technical analysis video, I do need to share a few things just so that you have a framework to understand why we're putting stop losses, why we're entering, and where our take profits are going to go. And then we'll also, of course, deal with the technical tools. So a triple top, that's what this would be called on the 4-hour chart, that is by many traders considered an entry area. So we're going to use that as our technical tool for today. And so I'm going to go to the middle, and that's going to enlarge the screen so that I can focus on the pound USD. Now I'm going to need to bring up my trade station because I'm going to go ahead and enter a trade. Now I'm not suggesting that this is a good trade to take. I'm not saying that this is how we do technical analysis and actually qualify a trade. Not at all. We all understand that our purpose of this video is to go over the technical tools and how to enter, exit trades, and use our trade station. So I'm going to go up to right here. It says terminal, and when I click that, it brings me up down at the bottom. Now notice that the bottom balance is 10,000, and this says JPY. That's yen. Okay, so that I've left this here. I did notice that when I downloaded it, and some of you might have a different currency. So I'm going to show you how to adjust that. What we're going to do is go into File and go to Open an Account. And right here, Account Type, we're going to put USA. Okay, we've come to here and we've got our deposit at 10,000. Account type, we've made sure that says USA, and then we go to next, and notice if this says FXCM JPY. I do not know why that is set at the default, but let's go ahead and change that to US demo and go ahead and click next, and let's see if that doesn't change us down here. Okay, now there we have USD. So if you had something other than USD, that's how you correct that. We're seeing our triple top. We've got our trade station, says 10,000 USD. We want to enter a trade. All we do is come to this gray line here. Again, I'm simplifying this. I'm not qualifying this trade in any way. I'm just going to go ahead and show you how to enter. So what we did is we right-clicked. Came down to this gray line, which is the currency bar, right click, go up to new order. We're going to have to talk about some money management because you're going to have to know what volume means, but go ahead and take a look at this. You have volume, you have stop loss, you have take profit. So we're going to set a stop loss. This is where if the price goes against you, and we're going to look at shorting or selling. So we're looking at this for the market to go down. We're expecting the market will bounce off of here and head down. Okay, so we're on to look for a sell. Now I can enter a sell right now just by clicking this button, and I'm going to because I'm going to show you numerous ways to take this trade. What I want to find out is the volume. Now in some platforms this would be considered lots, and we refer to it as lots, although MT4 does not call it lots. But what you would do is figure out what your risk level is, and that's based on how much of a stop loss you're going to use on an average. I like to tell people figure an average stop loss of 100 pips and then use the volume accordingly. Okay, so what we want to do is figure out everything based on 1% trading of our funds, and that's why we use $10,000, especially in demonstration. It's easy. 1% of 10,000 is $100. Okay, so let's go ahead and enter this trade so we can figure out what 1.0 is. Click sell, and that entered our trade. Okay, now we come down to look at our profit. Okay, notice that both of these numbers are the same. You do not want those numbers the same. What that means is it's showing you your profit in dollars and dollars. Okay, what we want to do is know in pips and dollars. So we're going to right click on profit, and that's going to take us up to where you see profit, and then go over to the left, and you want it to say as points. Go ahead and left click there. Now notice this says 2.4. That actually should be 2.4 in your mind. It never will be, not on FXCM. Some platforms do show a point, but that'll be, or they'll just show a whole number. But that's actually a fraction, so that's 2.7 pips. Okay, so 2.3 pips is $23. Now we have 1.5, 1.8. Okay, but you'll notice that it's reflective in here, so that 2.1 pips is $21. So what does that mean? It means that it's $10 per pip. So if we went up to 3 pips, it would be minus $30. Notice it starts out minus. Every time you take a trade, you pay for your trade up front in what's known as pips. Okay, a pip is the smallest increment that the market can move. It's 1/100th of a penny. So if the market moves 1 penny, if the dollar, say, gains against the yen 1 penny, that will be 100 pips. A pip is 1/100th of a penny. Okay, so every time right now the market is moving 3.1 pips, it's a $39, or it's a 31, so it's a 10 to 1. So basically your pip is equal to $10. Now that's not what we want. Okay, that is too much. We want to be able to use increments, because if this goes 40 pips against us, that's $400, and we only want to risk $100. Okay, so we want the reason I said use a 100 pip stop loss to gauge your risk is that if it moves 100 pips against us, we want to be able to then have risked $100. So what does that mean? That means that we want to have every pip worth $1. So our volume, we're going to go back to our volume. So what I'm going to do here is go ahead and right click, and I'm going to go to close order. Go ahead and click cancel here. This says that you're about to activate one-click trading mode. You do not want to activate one-click trading mode. That means that you don't get to, it makes it impossible to take your lots out or your volumes out in stages, so do not activate that. Okay, so I'm going to go ahead and close, and I've taken out my trade. So now you'll notice, because we were negative, our balance is negative over here, $9,986. So we just lost $14. Okay. Now this time I'm going to go ahead and enter again. Right click, go up to new order, and instead of 1.0, I'm going to come down here, and I would be looking for 0.1, which doesn't exist. So I'm going to put it in manually, 0.1. Now that should give me $1. My volume then is $1 per pip. So let's go down and go ahead and enter the trade and see if that works. Okay, now I'm 2.5 pips negative, and it's $2. 2.8 is $2.80. So now if it went 100 pips, which would be 100, 0 would be 100 pips. This is 3 pips, and it looks like 30. And don't ask me why. It's a little bit confusing when you start to understand. Just always see the last number and a point, a decimal in front of it, and that will help you. Otherwise, you're thinking this is 25 pips that you start out negative, and it's not. So 100 pips would be 100 point, a fraction, 0.1, 0.3, whatever it is. You'll never see the point there. Okay, so if it goes 100 pips against us at this point, we've lost $100, and that's what we want, because $100 is 1% of 10,000. Okay, now let me explain why that is important, and that is to gauge your stop loss. So for the sake of demonstration, I'm going to put another line 100 pips above our approximate entry. Approximate entry is this line right here. See the middle number? So this is what we call our crosshairs, and if you click on that, just left click and bring it over, what that crosshair does, it allows you to measure distance on your platform. So in the middle number, or the left number is 0, right number is 1.64882. That's the price that you're currently at. The middle number is the pips. Again, remember there's a decimal, so it's 54.9 pips. Okay, so approximately 60 pips. We want 100. So now to move this line, just go ahead and double click with your left clicker, your left mouse. Double click it. There you go. And again, click with your left mouse and move this up. And we can come back and measure it, and of course, okay, now we're at 87 pips. Now, of course, the other way we can do that is simply go look over here, 1.6433. So 1.6533 would be 100 pips. So approximately, well, actually that's pretty exact. 1.65338, 1.64338. That's 100 pips. Okay, so let's just say we were going to set our stop loss at 100 pips. Our stop loss then would be set at 1.65338 if we enter the trade at 1.64338. Again, I don't really worry about these decimals. It's just not worth calculating in. So let's go ahead and take this trade out again. Actually, I guess we can leave it in. Let's go ahead and set the stop loss. I'm going to right click on the blue, come up to modify or delete order. I'm not going to delete it, but I'm going to modify it. Here is where we're going to put in our stop loss. Okay, so what I'm going to do is just left click on the red, and it's going to bring that price down. Now I'm going to move that price up. I can either push this little button and move it up, or I can just come into here and left click and then backspace and move it up to 5. That gets me closer. I want 16533. It's at 16529. Okay, again, I don't worry about decimals, so 16533 is fine with me. And now I have my stop loss in place. If I click modify, it's going to go ahead and put that stop loss in, and then you'll see that up here next time you pull up your that little box. But what it did is S/L is it put a stop loss in here where before we had 00. So let's talk about this bar here. This is the time you put the trade in. This is the type. It was a sell. The size is 0.10 lots, or more accurately for MT4, that's volume. Now, what we need to understand here now is that 0.10 is what we're going to use for our system and our education. We're going to call that one lot. So if I tell you to put in one lot, if you were in my mentorship program and I was training you personally, and I said, okay, put in one lot, and you have a $10,000 account approximately, you know 0.1 is one lot. That's $1, so that we're gauging that to the 100 pip parameters, so that because most of our stop losses are between 50 pips and 150 pips. Okay, so that gives us a range. If we were going to go 50 pip stop loss, we could put in 0.2, which would be twice the size because our stop loss is half the size. Excuse me. So 0.2 would give us at 50 pip stop loss. That would give us 100 pips. $100 risk, which is still 1% of 10,000. And you don't have to learn all this right now. You can watch this video again. But also under the money management videos, we go over all this. But again, I have to do a certain amount just so you can understand what I'm talking about in setting this up. So for this account, 0.1 is one lot. Okay, the lot then is the smallest amount that we're going to use as our standard individual entry amount. We might put in 5 lots, which would then be 0.5. We might put in half a lot, which then would be, let's go to new order and I'll show you. Half a lot would then be 0.05, which can actually be found here. So this would be 1/2 of a lot. 0.01 now would be 1/10 of a lot. But you can see what we did is we discovered, we went to our demo account on this, and even any live account you set up, you'll always get a demo account with it. So you want to experiment in your demo account with the same amount of money you have in your live account, and you want to get your parameters set up. Very important. There's been many people that have damaged their account severely by thinking they were putting in $1 increments, and they're actually putting in $100 increments. It's especially you have to check that when you start trading oil and gold, because they might not be the same as what your Forex is. In fact, they usually are not. So back down to our bar. This was the price that you put in the trade at. This is your stop loss. Okay, and you can always move your stop loss, and I'll show you a couple different ways to do that. One way, let's say that the price is moving down. Okay, well, now we come up with some other things. I'm just going to keep working through all the issues that might become questions. This is what we call a trend line. Okay, we went up to this area and grabbed a trend line. This will be your horizontal line. This will be a trend line. This is a vertical line. Let's say you want to see what price this low is at, and I'm sorry, at what time the low. Well, it happened at 2013 at GMT time. Okay, so you can, well, and actually you can set these times down here if you to what you like. They usually come set standard GMT time. So this is a vertical line, and sometimes people like to just segment off highs and lows with vertical lines. If you left double click and then right click, you can delete that. Left double click, right click. Okay, now, but this is a trend line, and if you leave it as is, it's a ray. Okay, so that's kind of helpful and nice when you want to put a trend line all the way up and just keep it nice. Oops. Okay, you want to see how it goes, just extend it all the way. That's fine. But if you want it segmented, which I do like, double click left and then right click. Now you can either delete it here, or you can also go to trendline properties and just click this button ray. That'll come off of there, and then you've shortened it down to a segment. And then what you can do is it'll come up like that. Double click on left, and you can pull it however you want it, however long you want it. And then when you have it where you want, you can double left click and that'll come off. Double left click, right click, go to delete, get rid of it. Okay, so what I was getting at here is if the price were, say, to move down to here at that point, and it breaks this low, okay, at that point you might want to bring your stop loss down. Well, all you got to do is drag this, just left click and hold, and you can drag this down to where you want it, and then this box will come up, and then you click modify, and notice we changed our stop loss down here. Okay, watch again. 6455, I'm going to move it up. I just left click, grabbed it, just dragged it, modify, 6455, 6485. So we changed it that way. So that's one real easy way to change that, and it's really nice, especially when you have numerous trades in with different stop losses and different take profits. You can change them really easily that way. Okay, so for now we're moving this back up to approximately the 100 pip line. Now sometimes what's challenging is if you have your stop loss near your, let's say we had them both on the same and you wanted to grab your horizontal, sometimes it'll grab your stop loss instead. See, like there. I'm trying to grab my horizontal. It did that time. That time it grabbed my stop loss. So you have to be careful of that. You usually don't want a horizontal line near where you have your stop loss. Okay, let's talk now about, let's see, we have, okay, this price is where you entered the trade. This price is the current price that's moving up and down on the chart. So this is your live price. This is where you enter the trade. Pound USD, GBP USD, that's the pound USD. Commission is for financial instruments that have commission, like stocks, ETFs, which you're not going to be trading that for now, at least, and I don't believe you can even trade that on this platform. Okay, swap. Now that's basically interest, negative or positive. As you hold a currency past 5 p.m. Eastern, is you're either going to get, so you can put in a trade at 4 p.m. Eastern, and then 5:01 Eastern, you're going to have a swap come up on a currency. Either they're going to ding you for interest for holding it over the close of New York session, which closes at 5 p.m. Eastern, or they're going to credit you in interest. And that's a whole another talk of what currencies and how interest is charged. And it's not really a way to make money, but some people try it. And it's not really that big a deal to get dinged your interest. But just so you know, that is what swap is. And of course, we talked about the profit. So 6.5 pips is $6.50, and that gives us 0.1 is a $1 pip movement. Every time it moves 1 pip, 0.1 is equal to $1. Okay, so we should have all that covered. And let's go ahead and look at putting in a pending order, and then we're going to talk about take profits. Right click and go to new order. Now this time we are going to do something a little different. Type is instant execution. If you click sell, that's instantly takes it in. Now what we're going to do is we're going to set something called a pending order. And there's different types of pending orders. There's a buy limit, sell limit, buy stop, and sell stop. Okay, let's go ahead and move down to the 1 hour so we can see how this is going to work. Now you can see how this is bouncing off of this top resistance line. So we're actually in a pretty decent place for a short. We'd like to see it move down and up, and gives us a little better setup, but this is good for now. So what we're going to do is we're going to say if it goes below a certain point, we're going to want to enter this trade. Okay, so I'm going to draw a line underneath some of this support levels, and underneath this EMA 21 at 1.6365. That's where my buy, that's going to be, I'm sorry, it's going to be a sell stop. Okay, now to understand stops and limits, if you're going to buy higher than the price is, that's going to be a buy stop. If you want the price to retrace and then you're going to buy at a lower level, that's going to be a buy limit. And the reverse is true. If you're going to sell at the lower level, in other words, the natural direction of, if you're going to sell in the direction of a sell, okay, in other words, the market is going to keep moving down towards a sell, a bearish move, that's a sell stop. If you want the price to move up to a next, say a next resistance level before you enter the trade, that would be a sell limit order. Okay, so if you're going to buy and wait for the market to move up, bullish, buy stop. If you want the market to retrace in price before you buy, that's a buy limit. Okay, so in this case we're going to do a sell stop, okay, because we want the price to come down to this area to show us that its willingness to move down, and hopefully it'll keep continuing, so we'll set a sell stop. And we're going to set that sell stop at 163.65. So this is at price. Again, we're going to use 0.1 with a 100 pip stop loss. And I can just go in here, click, left click, backspace, and put that at a 3. I want 1.365. I can again do the same thing here, backspace, and then I can just move this arrows up until I get to a 5. Okay, 16365. Now let me go ahead and get rid of that so you can see this go in. Now I'm going to use a stop loss 16528. I don't want my stop loss that high. Let's just go ahead and 100 pips above 16365, and that's going to be 16465. So 16365, 16465, that gives me a 100 pip stop loss. And I'm going to go ahead and put in take profit here, and let's just say that my take profit, I'm just going to pick the take profit to be down here at the bottom where I have a support level at 16289. Again, I can backspace and make this a little quicker, and then I'll have to go up 162. Of course, you can put the number in, or you can just let it go like that. It goes pretty quick. 16289 is my take profit, and then I'm going to go ahead and hit place. Now notice what it did. Your immediate entries get placed above your currency bar. Your pending orders go below, okay, so they don't get mixed up. Okay, like I said, it's tough if you put a line right there. I forgot to erase that before. So here is our TP over here. It says TP. That's your take profit. And there's not, they didn't bring the line up here. Let's see if we go to the 4 hour if we see it. Well, it didn't. But it says sell stop, and it's put that sell stop. Usually it'll have a green line right there where you have your entry order, but it didn't. Or it'll have a red line, and then sometimes the take profit will be green. Depends on your trade station how they've set their parameters. So we have, however, two stop losses. Our first order that's currently in, the stop loss is up here. Our second order, which is right around in this area, stop loss is here. Okay, so you now have two orders setting in. Let's go ahead and set a take profit for the one we have in, and how we're going to do that is right click and go to modify delete, and let's go ahead and put in a take profit right here. You go copy as, click this blue, and that's going to put you in as take profit. These that you would do, that would be when you went to enter the order, or if you're setting pendings. Okay, so take profit on that. Let's go ahead and set our take profit. Now let's put it at the same spot, a little bit higher, 162.89. Let's go 162.95. And so this time I'm just going to go ahead and put that in, 162.95. I just punched it in all manually, a little faster, and let's go modify. Okay, so now you can see I have my take profit came down. So if this chooses to come down, I'm going to get entered in about, draw a horizontal line from about this point. I'm going to get entered in on a short, and then I'm going to get my profit taken out in two places. This first trade that I entered right here, which my stop loss is up here, I'll get entered, and so we would make profits on both of these. Okay, now my money management isn't perfect here. If I was going to put in two lots, each one with a 100 pip stop loss, and I want to keep a 1% risk, I'd want to have these at both 0.05. Okay, so I didn't do this real to life, but I think you guys can kind of understand how we operate that. Okay, so that's pending orders, that's stop losses, that's executing at market. Now let me show you one thing in case you have a question. This comes up quite a bit. New order, we're going to go pending. Okay, what happens when you do a pending order? And we're going to go ahead and do a you make a mistake and you put in buy limits. Okay, and then you're going to go, well, I want it to buy when it moves up to break these highs at 164.42. Okay. And I'm going to set my stop loss down around here, 163.55. And I'm going to go place. Okay, so I've got my buy limit. Now I'm telling you I'm making a mistake here because this is going to come up for you. And I'm expecting it to buy when it breaks up here, my stop loss somewhere down here. Hit place. Ooh, okay, invalid stop loss or take profit. Why? Because I was wrong in how I did this. I was trying to set a buy limit, but a buy limit is after it retraces, I buy at a lower. So when that happens, it's not your trade station not willing to work with you, it's that you've got something messed up. Something was mixed up. So let's change this to buy stop. Now that, when it moves up, I can now enter my trade once it gets above this. My buy stop at 164. Let's move it up higher. They also don't like very tight stops in the U.S. There's just a lot of regulations that have come down for your safety, of course, in the U.S. markets, U.S. regulations for U.S. companies, U.S. platforms. I'm not really looking to where I'm moving this to. Oh, okay. I see what's going on. 162, 16295. Ah, yes. Okay. Take profits all messed up. Let's go ahead and eliminate that, because my take profit was down here, but I was looking to buy going up here. Okay, with that in mind, let's go ahead and adjust this back up. 163.55 is where I want my stop. Now, although that was not the problem, I don't think it was the problem that my stop or my entry was too close to market. And I did mention that about U.S. companies. That can be a problem. It is a very real thing. Typically, because of U.S. regulations, platforms will require a larger entry and stop spread to market rate, simply because for your protection, so they say. Okay, 164.10. Let's back this off again and see if it'll allow us at 164.50. And I think really what the problem was our take profit was actually lower, which would be impossible. Okay, there we go. So that was probably the problem. And now we have another pending order. We have a buy stop in. And okay, I'm going to go modify this. And I'm going to add a take profit. Okay, so take profit. Now see, this is a little bit different because we're modifying a pending order that has not been entered yet. And here I can modify the take profit. If I click the up arrow, it'll put it at 164.10. Okay, so we're going to obviously have to change that. I'm going to go ahead and put this at 165.10 or 165.51. I'm sorry. So it's up there a ways, and I'm going to go ahead and modify my stop loss just so you can see that we can do it. And I can even modify my entry price if I want. Let's go ahead and hit modify. If you hit delete, the whole pending order goes away. And here, modify. And then that just changed the parameters on that. Okay, that's for entering, exiting. Let's go ahead and take this trade out. Pound USD. I'm going to left click and then right click, go to close order, and I want to show you how you can take out partial. So let's say I'm up in profit, or the trade's not going my direction, and I want to take out half my lots for whatever reason, whatever your trade management is. Most likely it's because maybe you're up 100 pips, you want to take out half your lots. Go to 0.05, and of course you can manually backspace and put in any amount, but 0.05 is half, and then just go close. Now watch what happens down here, 0.10. We can close that, and half of our lots came out, and so now 0.36 is worth $1.80 instead of $1. Sorry, 3.6 instead of worth $3.60. $1 per pip movement is now worth 50 cents. So you can see how that worked. Okay, if you want to delete any of your pending, just go right click, modify or delete, click delete, and you can see it came out. So we're going to do that over here too, modify or delete, and those are gone. Okay, I'm going to leave this in, I guess, for the rest of this video. Going over here to the left side, you need to learn what all of these mean. And you can simply see that right here. AUD, well, it's not giving you the full. Anyway, that's Australian dollar versus Canadian. NZD/JPY. There it is, New Zealand dollar versus Japanese yen. So you do well to learn what these are over here in your symbols. And then if you right click on that, you can actually order from there, or you can look at your chart window. Now, if for any reason you don't see many of these, we can go hide all, and only a few are there. If that's what it looks like, just right click and go show all, click that, left click that, and they'll all come up. Okay, you can go click tick chart, and you can see what each currency, whatever currency you've chosen, you can see it there. Okay, if you go pound USD, go tick chart, and this is less, these are moment by moment. This is less than the 1 minute chart, and if you find yourself trading that, you'll need to visit our psychological management session. Okay, I'm just kidding, but no reason to be trading the tick chart. All right, up here we've already covered. This is the 1 minute, M5, 15 minute, 5 minute, 15 minute, 30 minute, 1 hour, 4 hour, daily, weekly, and monthly. Up here, the line chart. So we're going to click the euro and turn that into a line chart. We don't use that, but you might like it. I don't use it in my trading, and I don't teach it. And then the bar chart. Especially in stocks, people do use, a lot of times they use the bar chart. It's a little bit of a different system of identifying patterns, at least as far as bar patterns. We at No BS Forex, we teach candlesticks. The navigator, you can get rid of that and see more of your full over here. If you want it back, you go up and click navigator. Now what that is this is just custom indicators, and that's helpful in the future when I teach you how to put indicators on your charts. Expert advisors, we will have expert advisors for you, and those are basically little software programs that you put on your charts, and they'll help you with your trading, make your trading more automated, and we will be offering those in the future. According to our educational program, we will be offering software programs to help you in your trading. When you're sleeping at night, it'll take your trade out for you. Depending on the parameters, it'll enter a trade for you. We can program to do anything we want, and that'll be more in the future as you guys learn. Let's see, anything else we need up here? We talked about the crosshairs. That's for measuring distance mostly. 2186, that's 208.6 pips. Okay. Fibonacci levels. Fibonacci, that's something that you'll learn as you go, what each of these numbers is, and retracement levels and all that. Very helpful. Don't worry about these. You can play around with them if you want, but we don't really use those. So the rest of this you can play around. I think one thing I do like is to build a tile horizontally. Okay, for example, we're going to get rid of our actually we're cutting off our charts here. If we come to window, you can tile horizontally, and it'll place things above, place your charts above your platform. Now when you get rid of your platform, you're going to have a space down here. You might want to readjust that. Windows, tile horizontally. And okay, let's cover these deals here. Chart shift. Let's say your chart looks like this. Just go ahead and twice, that'll bring it back to a manageable space. If you want it more to the right, it'll put it there. So that shifts it back and forth. Now this is auto scroll. If auto scroll is not on, what happens is, okay, it must be, yep, see it pop back? If you click auto scroll, that'll take that off of there, and you can go back as far as you want, and it won't pop the chart back to you. If you want it to come back, go ahead and click auto scroll off, and it'll bring it right back. This is zoom in, zoom out. So very simply, if you want to zoom out and so you can see more of your chart, you do that, and zoom in, you can get very, very close. So you find what's comfortable for you. Typically something like that is comfortable to see the time frame that you like. And we've covered the line chart, candlestick, bar chart. So I think that's pretty much all you need to know for now, and any questions, please post them at the bottom of the video. If there's something else that you come up against that you want to know, we will cover adding indicators as time goes on, and that'll be in this video section. But right now I'd like to have you get a little more education before we start covering implementation of indicators. Okay, that's it for this video. Hope to see you in the next one. God bless.